Hello. Hello, everyone. Let's start. Students are late. Hope I'm audible. So still recording will be available. Whoever are going to be late, you can go back and check the recording. So we did all the practicals yesterday. I'll only show how things are done when it comes to doing the bank reconciliation, and then recording the monthly closings, and finally we'll check the report. So today is going to be the last day of the session. All right, we'll directly go into the subject without wasting the time. All right, so we tried a purchase order. We recorded all the bills, invoices. We have recorded all the receipts. We also recorded the other bills, petty cashes, payment vouchers, and then now we have got bank statement. So we have recorded most of the transactions already when we did receipts, and also we did the payments. So automatically, most of the transactions are already run. With the bank reconciliation, 99% of our problems will be automatically solved. So we are going to do a bank reconciliation. So in order for us to do a bank reconciliation, we have got the bank statement here with us. Yeah, this is the bank statement from the bank. So these are actually not real bank statement, but yeah, it's from the bank, mutual logo. All right. So this bank statement contains all the debit and credit values and balances. This is the opening balance, and this is for the month of October, from 1st October till 31st of October. Bank statement are there. The opening balance is 2.3 million. Closing balance shows 2.5 million. That's the at the end of the month. Yeah. Now we're going to see whether this is matching with our records, whatever we have recorded in the system, if this is matching. Yeah, that's what we're going to compare. So now I'm going to head to the chart of accounts. Now, if you go to transaction, there also you can find the chart of accounts. Now, you know, when we go to, if you go to chart of account, we can take the report from any account from here. So what I'm gonna do is I'm gonna type commercial bank. That's gonna give you the results of commercial bank. I'm gonna double click it. So I'm getting all the transactions related to commercial banks. Yeah, commercial bank. Now, if you see at the end of September, this is last day of the September. So at the end of September, there is a balance. We can see the balance. I'm gonna use the mouse. So this is end of September. This is the one, end of September. The balance is 2.3 million. So if you go to the bank statement, it shows the same balance, 2.3 million. All right. So that means the opening balances are matching. So we're gonna see what happened in the month of. We're gonna see what happened in the month of October. So what I'm gonna do, I'm gonna filter from here. We have got a filter here. Filter from to date. I'm gonna say 1st of October till 31st of October. Yeah, I want the bank statement from 1st of October till 31st October from the books. Yeah, we're taking the statement from the books. Yeah, so these are all the transactions that we have recorded in the books. It's not clearly not matching with our balance. So 2737 is the balance here, but ours is actually 2537. So in this case, we need to check what happened here. So I'm gonna go ahead and download this one. So all the transactions we have here are for October. You see here, 1st October till 31st October transactions are there. So I'm gonna click on this download button. And then I'm gonna go ahead and open this download. So you can simply easily download this. Now I have this Excel file from our system. Yeah, this balance is from our system. So it's a little bit of messy when you download. So I'm gonna remove the areas that are not needed. So I'm gonna delete these parts. That's not, I don't want them. I also don't want these details. So I'm gonna delete them. So just to make it simple, yep, I'm gonna increase the size so that everybody can read it here. Okay, double tap. So now, hope you guys know Excel. If you don't know Excel, please, we have an Excel program. You can join that as well. From the beginning till end, we do Excel. All right, so this is Excel. So in this Excel file, we're going to compare with the bank statement here. Sorry, from the bank. This is from the bank. This is from our books. I'm going to check if that is correct or not. So I don't want these part also. I'm going to just remove them. Okay, now it will be easier for me to compare. Okay, so now what I'm going to do is first check this one, 327,400. So 327,400. Do we have 37 and also 28.442? This shows here 327,400. So that's matching. So I'm going to say here, highlight this one as matching. The next I'm having, so I'm comparing bank statement with my books, not my book with bank statement. Yeah. So bank statement should be correct. There can be errors, but usually it's correct. And then we are comparing with ours. So here 258,761. So we have the same here. So I'm going to say this is correct. This is available. I'm going to highlight this also. All right. So I've got 1.5 million 411. Yeah, it's matching. I'm highlighting here also. Next, I'm going to check 1950. We have 1950.29. Highlighting it. It's there already. 23,712. 23,712. These, remember these two we have recorded. 23,712. So we had the bill of 22,800. The remaining one we have put as we have recorded as a exchange loss. I hope you remember. So I'm going to highlight this one. I'm going to highlight this also just so I know it's been recorded. So we have 442,300. That's also there. I'm going to quickly highlight this one. And then we have 51,850. That's there. I'm going to highlight this one as well. 46,990. I'm going to highlight 46,990. 30,189.14. 30,189.14. 367,751. 367,751.81. 251,746.98. 251. 251,746.98. Sorry, yeah, Rahman, sorry, just to remind you, because what we are doing is we are checking now we have recorded everything until yesterday. Now we are checking if my bank statement is matching with the book balances. Yeah, I've downloaded this from the book. I went to the chart of accounts, selected commercial bank, and then from the commercial bank, I filtered the date from 1st of October to 31st October. And then this is the October transaction in the book. So I have downloaded this one. So this is the transaction I have downloaded. And then I also have the bank statement from the bank. So I'm now comparing one by one if they are matching. Yeah, that's where we are, just to give you a head up. So 29,929. 29,929 is there. So I'm highlighting this one. So 29,929.04. 366,676. Yes, this payment is there. 366,000 is already there. Next one is 4594. We have 4594 also. I'm highlighting here in the book also. Just checking whether they are available or not. Okay, 453.31. It's there. Exactly the same amount is matching. 252,700. So 252,700. We have recorded the same amount in the books. Now 183,871.91. 183,875.91. It's the same amount. So we have highlighted already. 352045, exactly the same amount we received. It's shown here. Okay, we're just comparing. We'll quickly finish it. So 611,819, I want to check if it's there. 611,819, it's there also. Here, it's available in our bank statement as well. 244,724, 244,724,724 also available. So I'm highlighting. And then 426,735 debit. We see here 426,735 debit also. We have recorded already. 494,467. It's already there, so I have seen it. So 300,000. I'll check. Yeah, we have 300,000. So I have this also. Now I'm checking in the bank statement 597,268. Yeah, it's available. I'm also highlighting here. So here 192,352.99. It's available. I'm gonna highlight here. I'm also gonna highlight here. So 158,580. It's there. It's there. 122,700. It's there. Just quickly going over this. So 42,700. It's a payment. It's available. We made this payment. It's there. So 253,729. That's also there. And then 269,700. Yes, we received this amount. Again, this is also, we have already recorded. So we'll check. We also have this 76,000 is not available here. It's a vehicle loan. We'll record it. This one also bank loan, not recorded yet. Monthly service fee not recorded. It's 203,774. 203,774 is available. I'm highlighting them also. And then there is 984,091 is available. Okay. So these are the areas that are available. So if you check our books, it's already, everything is already recorded. So in the bank statement, there are transactions that still we need to record. We'll see how to record them. Okay. So you see here, the first one is the bank charges. See, there are transfer fees. Now here 30, there's another 3060, here's another 3090, and there's another 60. So 150 rupees bank transfer fees are there. Apart from that, monthly service fee 1,500. So 1,500 and 150 are there as a bank charge we need to record. So I'm going to go here. I'm going to go to say new and then journal entry. What I'm going to do here on 31st October for the whole month, I don't have to do one by one. So what I'm going to say is bank charges. So bank charges going to be 1,150. That's the bank charge. So I'm recording everything together. So it's here. Here it's going to be monthly service fee, and transfer fee. Transfer fee altogether 1,100. Sorry, 1,650. Yeah, 1,500 and 150. Okay, zero tax. If there are tax, you have to include. And then I'm going to say from commercial bank only, we made this out. Now it's going to be 0. All right. So save and close. Okay. We have recorded now all the bank charges. Now we have got two things to do. One is vehicle loan. Other one is bank loan. We'll check this one now. Rahman, you're there?
Sir.
Yeah. Okay. Ask me any questions. Yeah. If you don't understand something, I'm going to be keep talking. Just ask me if you have a question. Yeah.
Yes, sir.
Okay. Okay, so we are going to go to the monthly closing document. Now you know in the bank statement we only have to record the loan, vehicle loan, and the bank loan. We'll come back to that. Everything else is already recorded. Yeah. So we'll start with the vehicle loan. So it will be easier for us to continue. Okay. I'm gonna say under the monthly closing documents, there's a document called loan, bank loan. Yeah. I'm gonna open it. I'm going to close this, the other one, because it's already done. Yep. Okay. So we have already recorded one transaction related to this this bank loan. Now in this here, there's a truck loan, there's a bank loan, you can see. So what happens here under track loan? Track loan was 4.5 million. Yearly interest was 18%. Monthly rate was 1.5%. When we get the track, we pay 1.5 million upfront. So the loan was only 3 million. We have divided it to 60 period. That's going to be 5 years, right? So 3 million loan, truck loan for 60 period. So that's how we have calculated based on that. What is going to be the principal, what's going to be the interest, what's going to be the payment. So all these calculation actually we have in our full Excel course training. So, but here the document is provided. You just go through this and try to understand how this payment, principal, interest, and payments are calculated. So at the moment, we are paying 76,180.28 every month. Out of which the interest and the loan, the principal amount changes. Now, when we record the loan, we record it as loan current long-term non-current liability as credit and cash or bank debit. So bank debit and non-current liability credit. That's how we recorded the initial loan. Now, when we make the payment, this principal will take from the loan account, take off from the loan account. The interest will record as a expense. So this is the amount we are paying. Every month, the loan and the interest will be different. Now here, we pay principal 75,000, loan is only, the interest is only 1,100. Initially, the interest amount will be higher, but when the time passes, at the end, you'll see the interest is very low. So first installment, we have recorded already. I'll show you here. If you go to chart of accounts, under chart of account, you can see bank loans. So under loans, sorry, it's not loans. Vehicle loan, I think. A vehicle loan. Loan is just a loan. Okay, loan. Okay, we have got vehicle loan. So vehicle loan initially recorded as 3 million, as I mentioned. Initially, we have taken 3 million loan, and then the 31,180, you see here 31,180 principal, already we have deducted from here. So I'm going to go edit this document. You see here, 31,180 was the principal, 41,000 was the interest expense. And then from the bank, we paid 76,180. This is for the month of September. We are going to copy the same thing for the month of October, but slightly change it. So I'm going to say, I'm going to move and make a copy. You can simply go and do a copy from here. So I'm going to say, this is for the month of October. I'm selecting month for the month of October. And then loan payments going to be same amount, 76,180. Out of this, the principal amount is going to be 31,647. This principal is going to be 31,647. The interest is going to be 44,532.3. So this loan amount will not change. It will be the same throughout the period. Okay. So in this case, our balances will be matching. Yeah. I'm going to say save and close. In this case, what happens here? Interest account, interest expense going to be 44,000. This is the interest value. The principal, we are taking that off. I mean, we are debiting to the vehicle loan account. So initially when we recorded, we have credited the vehicle loan account. Now we are debiting it. That means our payable is reducing. Yes, that means we are paying this principal. But this portion is not principal, it's interest. So that we have to expense them. Yeah. So with the amount has gone from the commercial bank, we are recording that part. I'm going to say save and close. What's the problem? Okay, there's a problem. 18.29, there's a small difference because it says 28 and this says 29. I'm going to reduce this to 98, so it will be matching. Yeah, save and close. All right. So now I can also go to the other loan. Now this is a vehicle loan. I'm going to go to the bank loan. See here, this one is the track loan. I'm going to go to the bank loan. So under bank loan, you see here, first we made 121,000. Second payment also 121,000. We'll see what happened now. in the vehicle loan value, 4 million loan we have taken from the bank. So interest, real interest 20%, monthly rate 1.67 for the period of 48 years. That means four years. That means 48 months. So we have principal, interest, and payment. How the calculation is being made, you can see the formula here. There are four formulas I have used. I have kept the formula as it is, so you can go through and check again. So this is the calculation. So in this, first is the principal, the other one interest, and the payment. So this one together, it will become just 121,000. Now what I'm gonna do is I'm gonna check this loan amount. So usually, initially 4 million loan we have taken. First installment we paid 55,000. This is the 55,000 we made the first installment. So now I'm gonna do is I'm gonna record the second one. So I'm gonna say click on this and I'm gonna edit. I'm gonna go to the second one. I can actually create a new one. I'll show you how to create a new one. I'm gonna say new. I can say simply journal entry. In the journal entry on 31st October, what I'm gonna do is I'm gonna say so loan account. So short-term loan. It's not a short-term loan. It's a this is a bank loan, right? Bank loan debit. How much? It's going to be the principal. So I'm going to put the principal here. The description. Bank loan installment payment. You can put 2 because it's second one. 0. And also you need to say interest expense. So you can say interest expense account. So interest expenses account is going to be 65,000. So here, the next one's going to be commercial bank. We are paying it from the, it is automatically deducted from the commercial bank. So 121,721.45 exact amount. I'm going to say close now. We are deducting from the loan account. We are recognizing the expense, that is the interest expense. And then we are reducing from the bank account. That amount has gone from the bank account. Save and close. Now, you remember we have recorded these two things as well. So with this, bank account transactions are all done. Now, this is the balance. This should be the balance we should see in the books as well. I'm going to go to chart of accounts. I'm going to go to commercial bank. Yeah, under commercial bank, I'm going to check what's going to be the balance on the 31st of October last day. All right. So it says 2537732. What's the problem? 2537732. There is a difference. We need to identify what happened in this. Okay. Okay, let me do another quick reconciliation just to make sure this amount is matching, because we can't move on otherwise, and unless we know exact amount, it is matching. So I'm gonna, without wasting time, just in 5 minutes time, I'll just quickly do a reconciliation, because that's quite important. Otherwise, the amount can't be wrong. Okay. So I'm gonna open this. I'm gonna save it. So I'm gonna bank statement. I'm going to open the bank statement. Yeah. Okay. Editing. So I'm going to just remove these parts. Those are not necessary. And I'm also going to remove these just to keep it properly. I don't want this also. So memo, I'm going to just leave it like this. Highlight everything. Double tap. So it'll be all right. Okay. Now we can quickly do a reconciliation. Make sure these are numbers, so it'll be easier to track. Okay, I'm gonna make it a little bigger so we know the figures. All right, so 327,400, that's the amount we received. That's correct, I remember, 327,400. You see here, 327,400 here. So that's correct with these two together. So the next one, 1,586,411, that's the payment. That's also there. I remember that. 1950.29, it's also there. Just remember it. 258761, correct. We received it. So 20 23,712, 23,712. This should be correct. 23,712. We have recorded correctly. 442,300. 442,300. 442,300. Exactly correct. Next one's 51850. 51850. I'm doing the cancellation again. 46990. 46990. 30,189.14. It's correct. 367,751. What happened? Yep, that's correct. 251,746. That's also correct. Again, 29,929. Just checking that. That's correct. 366,676. That's matching as well. 40,592. Yes, that's matching. So this will happen to you also. So if you made a mistake, you'll have to recheck them. So, but always make sure you do it correct at the first time itself. It's 252,700. Don't be like me. Okay, 183,875. 183,875. I'm quickly doing it. 352,045. 352,045. Or maybe the bank statement is wrong. 611,819. 611,819. 244,724. 244,724. 494,467. 494,467. 426,735. 426,735. 300,000. We have the 300,000. Other one is 597. We have 597,000 also. Okay. 119,352. 119,352. 158,580. 158,580. 122,700. 122,700. Yes, 122,700. 42,700. It's already recorded. 42,700 also there. 253,729. It's there. Just gonna go. Yes. 269,700. 269,700 also there. 76,180. 76,180. 121,721.45. Yes. 984,000. 984,098.68. 91.68. Yes, it's correct also. Again, next one is 203,774.2. 774.2. Yeah. So everything is all right. What happened here is we recorded this value in a wrong date, I think. Yeah. So we have to check if we have recorded this on the right date, because we can't see that within this range. So I think we made a mistake somewhere, recorded it in the wrong date. We'll see the last transaction we have recorded. It should be for the. All right, so we'll see. I think this one. Okay, so we have recorded in the wrong date. See, we made a mistake. We have recorded in the month of December. It's supposed to be in October. So I'll put the correct date and save and close. Now, see, one mistake you made, everything has changed. All right, so now I'm going to remove the filter. Now we can go and see what is the balance on 31st of October. So now open the bank statement. 2537732. 2537832.53. 732. There is a small difference. If we can't spend time on this, searching for this, there's a small tiny mistake. Yeah, this should be here. You see here, the total bank charges are 30, 60, 90. Again here, another 60. So 150 plus 1,500. So it's 1,650. Yeah. So we have to make sure you put the correct amount also. So one thing changes one mistake changes everything. So now the balance you see here, your bank balance is 2537732.53. 2537732.53. The bank statement is perfectly matching. Yeah. So we have the proper bank statement. It's done properly. Yeah. So I'm going to close everything. I don't want this. This part also done. Bank loan also I've recorded already. So now in the list, we have few more things left. Monthly closing. So when you at the end of the month, we have closed the bank. Now we'll check the fixed asset. So we have to do the depreciation, right? So this is the fixed asset until September. We have recorded until end of September. This is how it's done. You see here, we have a fixed asset. And in the fixed asset, we have the asset name, reference number, the date we purchased the fixed asset, the category of the fixed asset, what is the unit cost, and what is the total value, and how many months we can use this fixed asset. After that, from the first month, August, that's when we started the business. September, October, November, December, January, December. What's going to be the depreciation? So total, how much the total depreciation? All are there. So now here we have the total depreciation. We don't have any opening balance from the previous period. So this means this is the total depreciation for the period. So if you what do you call, subtract 220,000 from this, this is the value of the asset. If you subtract total depreciation, you'll see this is your net book value. This is the balance. Now we have recorded September depreciation already. I can show you August and September depreciation in the book, so it will make it easier for you to understand. So if I go to depreciation, I not take a depreciation expense account. It's easier to track from there. Yeah. Wait, it's loading. It's always a little slow when it comes to this. Yeah. Save. All right, everything. I want everything. Okay, you see here. August depreciation I have recorded 250,344. Yeah, you see here 250,344 for the month of August. September we got some new fixed assets also. Altogether it's 252,478. You see here 252,478. That's what we have recorded. Now in October we have some new fixed assets we bought, small fixed assets. We are going to include here. Yeah, I'm gonna go to chart of accounts. And I'm going to go to fixed asset. Now, I want to say it's property, plants, and equipment. So this is the fixed asset. I'm going to click on this because all other accounts are under this account. This is the parent account. Under this, you see an indentation here, the gap. That means these are under this fixed asset account. So I'm going to click here. It will make it easier for me to track all the transaction happened during the period instead of checking one by one. So all I'm interested in, the transaction happened in the month of October. So I can also filter from here from 1st October till 31st October. I need the transactions. So I'm going to say, so these are all the purchases that we did in the month of October. So the first one was purchasing some USB flash drives. Yeah. So we need 4 spaces, right? So I'm going to go here. I'm going to enter some spaces. I'm going to say, I'm going to need 1, 2, 3, 4 spaces. Insert. Okay. I'm going to get here. So 5, 4, 14, 15, 16, 17, 18, 19. This is where we're going to start recording. So first one is some USB drive. So 7,000 is the value. I'm going to put the description here. Okay. Reference number you can take from here. I'm going to put this is bill number as the reference number so that you can track. So the date we purchase, it's going to be on 5th of October. We purchase on 5th of October. Okay. 5th of October. This is what category is this? This is going to be equipment, right? Same machinery and equipment. That's the category we have. That's the category we are going to put under. So what is the amount? It's going to be 7,000. Yeah. So that's only 1 unit. Just put all together. So as a 1 unit. So is it? Yeah, it's only 1 unit. We bought 2 units here. So in this case, it's going to be 3,500 each. So 2 units are there. In this case, if you drag this down, it'll automatically do the calculation here. So machinery and equipment, we put 48 months. So 48 months. And then August, there is no calculation because this was purchased in the month of October. Yeah. So the August is going to be 0. September is going to be 0. But October, we are going to copy the the formula here. All 3 months, we're going to go with the formula here. But in October, we bought it on 5th. That means we did not use for 4 days. So out of 31 days, we only use for 27 days. Yeah. So we have to calculate for 27 days. Now we have calculated here simply dividing the value by the month. So you divide H20 by the month H1. Sorry, by the month, yes. I1, yeah. I20, sorry, H20 divided by H20 divided by I20, you get the monthly depreciation value. But in this month, we only use for 27 days. What I'm going to do here, divide it by 31, multiplied by 27. So that means we only use for 27 days. I'm calculating exactly for 27 days. But the rest of the months, exactly we use for the whole month. We're going to use for the whole month. These calculations we made for the whole year just to keep them. So we'll know, it'll be easier for us to track. That's why we are calculating automatically for the rest of the year. Okay. Now we have calculated for the month of, for the flash drive. Now we'll do for the next one. So we also have another flash drive. So I'm going to put the value. So this is the same bill number. Sorry, it's going to be the same thing. Sorry, it should be 7. Yeah, because of your drag. I'm going to put the same date. Again, this is also machinery and equipment, same thing. But the value is going to be 10,000. Okay, only 1 unit. I'm just going to drag this down, these things down. So it's going to be 48. Be careful when you drag. It can make mistake also. Okay, September, no problem. But October, these values are correct because here again, it's exactly 27 days, the same thing, both together, right? So no problem, easy peasy. Next one, yeah, we have got tool set. We bought a tool set for us. It's 3,389. So I'm gonna say it's gonna be, it's just a tool set. Where did you buy? It is the bill number. You can put if there's a payment number or something. When did we buy? 15th of October. I'm gonna say we bought it on 15th of October. Easy. So it's gonna be machinery and equipment as well. What's the amount? Amount's gonna be 3,389.83. Okay, I'm gonna put the amount here. It's exactly the same amount, but it's only showing the full value here. But the exact amounts are hidden here, so don't worry about it. So I'm gonna drag this down, and then I'm gonna put here 48 because it is all the machinery and equipment we are using for 48 month. Okay, so we have in October, November, December, I'm copying the formula. But here in October, how many days we are going to use it? We are going to use it for, so we're going to use it for 17 days. So what I'm going to say here, instead of 27 days, we are only using for 17 days because we bought it on 15th. That means in October, there are 31 days. From 15 till 31, there are 17 days. So we are recording for the 17 days in October. The rest of the month is going to be 71 for the full month. Yeah. So finally, we have one more fixed asset. That's 24-inch Dell monitor. So we have bought 24-inch Dell monitor, and I'm recording it as a fixed asset. That's going to be on which date? 17th October. We bought it on 17th October. Again, that's also machinery. What's the amount? 65,000. Let's say 65,000. 1 unit. I can copy the formula down here. And it's going to be used for 48 months. August, nothing. September, nothing. It's going to be only in the October, November, and December. Okay. So in October, 17th, that means 2 days minus, so that will be 15 days total in the month of October. So I'm going to say 15. So that's also done. So total, we have done the depreciation calculations. Here we'll drag these formulas down because otherwise it will be wrong. Okay. Now you see here the total value of the asset. Monthly depreciation for October is also calculated. So I'm going to just refresh this value just to make sure these values are correct. Yeah. So values are correctly calculated. Now I'll have to record the October depreciation. Okay. Now I'll have to record the October depreciation. Now this depreciation involves sorry. Yeah. This depreciation involves different categories. Now you have furniture, fixture, office equipment, lease property, leasehold improvements, and then machinery and equipment. So in this case, you need to summarize them together. In Excel, we use pivot table for that. That will make your life easier. Yeah. So I'm going to say insert pivot table. Yeah. I'm going to say, okay, now you have a pivot table. In the pivot table, you're going to select the asset category and also the October value. Now it will show you exactly how much for, it's going to simply show you how much for each category the depreciation will be. Yeah. So we have to simply record it. Yeah. Just to, I'm going to keep it open. So I'm going to keep it open. This is going to be our depreciation value. Yeah, I'm sure. I'm sorry if you guys don't know Excel. In our other program, we teach Excel completely. Here, it's going to be only a QuickBooks, so I can't explain these concepts because our time is very limited. So this is how you do. From the sheet, you get the final summary from here using the pivot table. So it's very easy. I'm going to go here. I'm going to go to find the previous transaction. It'll be easier if you find the previous transaction and copy it. So I'm going to say depreciation. I'm going to go to depreciation account. This is the depreciation expense account. In the depreciation expense account, hang on, it usually takes a little time. Again, if you have any questions, please ask me, no problem, because it's quite important. I'm gonna click this previous one. This is the last month depreciation. I'm gonna simply go and make a copy. This is 30th of September. I'm gonna copy this. I'm gonna put 31st October. Yep. So now this is instead of September, this time it's gonna be October. So this depreciation for October, we have to make sure we put the correct description, otherwise there will be confusions. Yeah. Okay. Now I'm going to check how much is the depreciation value. You see here, October value is 254,531. You see the same thing here. 254,531 is the October value. Yeah, it's increased compared to the previous period. It was 252,000, now 254 because we had new fixed assets in the month of October. All right. So now first one is accumulate. Now we have to tell, okay, this is the depreciation account debit, and what are the accounts that we need to credit. Now we have got accumulated depreciation account every month. Instead of directly crediting the fixed asset, we put it under accumulated depreciation account. Now we hear furniture and fixture, machineries, vehicle, lease properties, all those different names are there. I'm going to just drag here so you can see vehicle, lease property, leasehold improvement. These are all accumulated depreciation accounts. Now I have the details here. Furniture and fixture, it's going to be 25,952. Is this exactly same amount? We did not buy anything new. So the next one, lease property, nothing changes, 134,34 because we did not buy anything new. Leasehold improvement, 11,134. It's going to be the same also. Where is it? Leasehold improvement. There's a slight difference because last month some partial calculations were there. So there's a slight difference. So machinery and equipment, I think that's a spelling mistake. Yeah, 39,771. So you see here the machinery and equipment improved because increased because we bought new machines. Yeah. Finally, vehicle, it's supposed to be the same, 47,240. Yes, it is the same. You can check here down, 254,531. This is the total amount. So you should know how the depreciation is going to be recorded. So depreciation debit, accumulated depreciation credit that you do every month. We are closing this month with this depreciation. I'm going to close this one because that's related to the previous month. I'm going to save this depreciation and then close it. And I'm going to bring this fixed asset and upload it here. Yeah. Save and close. So, Rahman, you got the idea? Yeah. All right. The next one. Okay. The next one, we have got So next one, we have got the lease, prepaid expense and salary, three things. And then we can simply go to the report after that. So I'm going to start with the lease. So it's very easy, not really complicated, because last time I explained how the lease is being calculated. So this is cash outflow every quarter. And then you see here the lease value, actual value, discount factor, and this is the value after discount. So we have a lease here for 5 years. We have office, showroom, and store all together. So yearly, quarterly lease paid in the first year 360, second year 420, 420,000, and so and so. So security deposit, lease administration fee, this 9% is the monthly borrowing rate. This is the lease, overall idea of the lease. Now, I have summarized all the payments that we are going to make for the next 5 years here. And this summary, for example, at the beginning of the year, you're going to pay a lease of 360,000 and administration fee of 150,000. So total outflow is going to be 510,000. This is the first one. So there it says discount factor is going to be 1. So the value also going to be 530. First quarter, we're going to pay 360,000. After taking the discount, multiplying with the discount factor, we are getting 352,000. That's the future cash, present value of the future cash flow. So calculating the total, we are going to pay 9.6 million actual payment. Considering calculating the today's value of the future cash flow, we are calculating it as 7.8 million. Now, in this lease liability calculation, we are bringing that 7.8 million here, and the depreciation calculation also, we are bringing it here. So in this case, every month, based on the percentage, this effective rate, we are calculating the finance cost. Now, first time I explained to you at the first day how the lease is being calculated. I can't go over again. So this is the lease payment we're going to record. Only this lease payment. If there are any payments, now the next payment is going to be at the end of October or beginning of November. So this is October. So next month there will be another payment. So we have to record this, but at the moment there is no payment. Yeah, at the end of October. So I'm going to record this finance cost here, lease liability finance cost. I'm going to record this one. So let's see what happened in the previous period. So I'm going to go to finance cost, or I can also check. Yeah, finance cost also you can check. It's going to be a little slow as usual. Yeah, 30th September, we have recorded a finance cost. It's 53,109. We have recorded this value. I'm going to record this value now for the month of October. I'm going to make a copy. Yeah, so finance cost is going to be 53,492. This is the finance cost for the month of October. Yeah, lease finance cost. I'm going to say save and close. Now, sorry, let's go back. I couldn't explain to you. So here what happens? Finance cost debit, lease liability credit. Now, from the lease payment, we are going to deduct for it. I'm going to show you how. I'm going to go to the accounts. I'm going to go to lease liability account. So lease liability account, yeah. Okay. Lease liability account, initially you see here, 7.8 million we have recorded as a lease liabilities. How did you record it? We have recorded it as property account, that means fixed asset account debit, lease liability account credit. You see here, this is the amount, the actual cash flow and the discounted cash flow. We have taken as this discounted cash flow as the lease value. You see here, and we are recording it as a fixed asset also, fixed asset and lease liability. Now, we have a lease liability of 7.8 million. From this, we deducted the amount that we paid. We paid initially the lease administration fee of 150,000 and 360,000 lease payment. So we have deducted. Actually, this is the value. From this, we have deducted. But with this payment, there is a discount. That's called lease finance cost. That is called finance cost. So finance cost, what we do for the finance cost, we debit the lease liability and then we credit the we credit the lease liability and then debit the expense account. Now, so you see here, when we make the payment, cash account credit, lease liability account debit. Actually, it says decreases. Decreases means lease liability account by nature, it's a credit value. So if it increases, that means your credit value increases. So here, when we when we record the finance cost, it increases the lease liability and also it increases the expense. So that's how we record the finance cost. Okay, so we have recorded this finance cost. You have the document, go through it and see how this works. Yeah, so we have recorded this. Sorry, we have recorded this value also. Now, this depreciation, we already recorded through depreciation. Remember, when we recorded the depreciation, 130,000, right? So, sorry. You go to the fixed asset, you see here 130,000 lease property that we have recorded already. Okay, so bank loan, fixed asset, lease, all done. Prepayments. We'll go to the prepayments next. Okay, prepayments are the payments that we make now, but we can use like that particular expense or item or that service for quite some next few months or next 1 year, doesn't matter. For example, we buy voucher books. This can be used for 6 months. Yeah, so we spread this across next 6 months. Stationery we buy, this particular stationery we bought, we could use for 6 months, and so we divide. So company registration, 38,000 we paid. So that's for the whole year. So we put every month, we divide it and then use it. Similarly, water coupon we bought, water worth 4 months, then we divide it accordingly. We'll see if we have any prepaid expenses. So this is prepaid expenses. We're going to go to chart of accounts and then we're going to look for prepaid expenses. Yeah, we're going to look for prepaid expenses. And then we have from August, we'll see if October, there is one prepaid expense. What is that? That's label printing. We did some label printing that can be used for 3 months. Okay, I'm gonna get some space here. All right, so that's gonna be number 6. I'm gonna bring it down. On what date? We made this payment on 1st of October. So that makes our life easier. 1st of October, this is the detail. So reference number, we have got a reference number. It's better to put the reference number. So what expense is this? Label printing. So this usually for the printers and all, there's a pricing label, right? This is the pricing label. So we can record it as a printing and stationery. How much you spend for this? 14,250. We spend 14,250. Yeah, sorry. Yeah, 14,250. Then we can use it for next 3 months. All right, we can use it for next 3 months. We can use it for 3 months. I'm going to put 3 months. Okay, so now it automatically calculates the payment. But the thing is, the expense is from October, so we don't have to calculate for August. Similar to the depreciation. So August there is nothing. September there is nothing. But in October, from the beginning, we are doing the calculation. That's correct because it's from the beginning. October, November, December, we have the calculation. That's perfect. So we have the calculation is done already. Okay. So say sum just to make sure these figures are correct. All right. Okay. So we have the prepaid expenses just like the depreciation. So you have the sheet, go through it, try to understand how this thing works. So we have the date, details, reference number, category, and the amount, how many months we can use it. And then here we are dividing the amount by the period we use it. So basically we are saying we are going to use this for 6 months. August, September, October, November. So 4 months are there. December, 5 months. We can also use in January next year. So likewise, we are separating. So here from August to December, we have got it's about 5 months. So another 7 months there in the next year, 2025. Yeah, that's how we separate this one. Okay, you see here, 34,000, 6 months we use. There's a 8,200 remaining that will be used for the next year. You see here, this one stationary 12,000 there. Again, for registration and license, 23,000 we are going to apply for 2025 because we do registration for the month of 12 for the whole year. So this year we are using a specific 14,400. The remaining 23,000 will be for the next year. All right. Okay. So now we have the figure here. Again, just like earlier, we're going to use the pivot table. I'm going to say insert pivot table. I'm going to say, okay. You see here, I want to check the category only for the month of October. You see here, it's easy to calculate using this. I'm going to say, I'm going to make it a little bigger so it's clear. Okay. So meal and entertainment, how much is 2,500? Printing and stationery, registration and license. Okay. So it's easier. So I'm going to go here. So I'm going to go to prepaid expense. You see here, previous month adjustments are there. I'm going to say, I'm going to edit this part. Yeah. All right. So that says prepayment. It's not. So now I'm going to make a copy. Yeah, I'm going to make a copy because we are going to record it in the month of October. So this is not going to be for August. It's going to be for October. I'm going to say this is going to be for October. Okay. I'm going to just copy and paste this. So everything is uniform. Okay. Now we'll see how this is being recorded. Now you see here, meals and entertainment, 2542. Meals and entertainment, it's correct, 2542 for this month also, the same amount. Yeah. Next, printing and stationery, 20,441. Printing and stationery, 20,000 because we added a new value also. Registration and license, 4167, exactly the same amount. So for the month, it's going to be 27,150 full amount. So it's matching exactly. So what happens here? Whenever we buy something that we can use for more than 1 month, we put it under prepaid expenses. But when every month what we do here, we take that some value from that, whatever belong to that particular month, we take it out from the prepaid expenses and we record it to the specific expense account. So this is the amount we are taking out from the prepaid expense account that's belong to these different categories in the month of October. Now, 27,150 from this, meals going to be 2,500, stationery is going to be 20,000, registrations and license going to be 4,100. So this is how we diverse them. Yeah. So this is previous one. I'm going to remove it. Let me save it. So sorry. Let me save it. And then I can simply drag and drop the prepaid expenses. All right. So I'm going to say save and close. Now prepaid expense also done. Okay. All right. So finally, we have got the salary. I'm going to open it. Yeah. So this is the salary sheet. Usually, this is what we're going to do. I'm worried that most of you did not attend the live class. I would have let you do this one if you have attended. Unfortunately, so for some reasons, I don't know why you guys didn't attend. You should have attended because it's very important. This is your life. This is something that you do every day. Yeah. So unlike other places, I put up everything practical for you to do because this is exactly you're going to do in your work environment. Yeah. But unfortunately, you weren't there. If you are watching later, please make sure at least you try to understand them because you're not going to do it practically. If you are there, I would have let you do this one. That's the only difference. Now I'm doing it. So anyway, at least just watch this one. If this is going to make a small change in your life, I'll be happy about it. But unfortunately, I'm really a little bit of disappointed seeing that most of you have not attended the class. You're only waiting to watch the video. That's not going to help you. I told you at the beginning. I messaged you a couple of times also just to make sure you guys watch because my intention is not to run a class, but also to make sure you guys learn something. Yeah. All right. Anyway, this is the salary sheet I have. I've got the employee number here, employee name, position, total salary. So this, sorry, position, days work, normality. I have also hidden some information here. I'm going to unhide it. Okay. Here, joining date, that's not necessary. I'm going to hide it. Okay. So this shows the salary details, salary structure of the employee. Now, Sajid Kosvatagama, his salary, basic salary is 280,000. That's his total salary also. Ajay, 150,000. And the others, they have basic and allowance also. Yeah, they get this. This is the salary structure. Doesn't change. This is their structure. If there's a salary improvement, increase, we'll update here. So the salary structure will change. Based on this only, I have done the calculations. Yeah. Now I don't need this salary structure. I'm gonna just keep it hidden. Now, the moment we put the details in these three areas, yeah, automatically all the salaries will be calculated, including the basic salary, allowance, overtime, total salary, EPF, we are going to deduct from the employees, payee. So the net salary will be there. Now, payee at the moment, there is a calculation. In the future, it will change. There's a new payee value, right? It has changed, but it has not, I think it has not implemented yet. So at the moment, we'll stick to the old way of doing it. Okay. Now it says Sajid 21 days. I'm gonna just update here. Working days, how many days? 29 days. Okay. So in this, you have to set up here. Yeah. Every month you have to make sure you set up only this part correctly. Yeah. You have to set up the starting date. Only the starting date you have to set up. Everything will automatically change. Even here, everything with calculations will change automatically. So Sajid worked 29 days. Sorry. And then Ajay worked 31 days because it's October. Upeksha, 31 days. All right. Roshan, 28 days. It was a small company with only very few employees. Anis, 30 days. Akila, 31 days. Gayani, 31 days. Sachin, 31 days. Sunil, 28. Kumara, 30. Sunil, 28 days. Kumara, 30 days. All right. This is the moment you put, it automatically calculates the total salary, including your basic salary and allowance. Sorry, I think I put it in the wrong place. I'm going to just copy it. Just going to paste here because it's supposed to be the day's work, not the OT hours. I'm going to delete it. Yeah, the moment you put here, it automatically calculates your basic and your allowance. Now, you see here, if you look at here, Sajid, 280,000 his basic salary. Because of he worked only 29 days, his basic salary will be 261,000 for this month. Yeah. So from here onward, the calculation will happen. How the calculation happen, all the details are here. You can check them. So if you are working in a company in the future, you can use this sheet because the details are already given, attachments already given to you. You should have downloaded last time. So if you did, the details are there. And today's last day upload, I will include the attachment also. But again, make sure you check them out. Okay. Also, there are some overtimes they did. Akila 13 and 12. So I'm gonna go to find Akila. Overtime, normal overtime 13, and a special holiday. Holiday overtime 12. And also Gayani 21, 12, 21 and 12. So this time sheet, time work details you will receive from HR. Yeah, how many days work and all those things. Somebody will monitor and give you the report. Based on that, you'll calculate the salary. Sachin, 22, 12, 22 and 12. Then finally, Kumara, 21 and 12, 21 and 12. So for some reasons, everybody worked on a holiday 12 hours. Okay. So now based on this, see, it calculates the OT payments. Now, here basic salary, allowance, OT, total salary. Is their total salary will be here. From this total salary, we're going to deduct EPF. EPF is going to be 8%. Payee depends on the salary. So we're going to deduct these two and we're going to pay to the government. Yeah. So this is the some salary we have to pay to them, from which we are going to deduct these and pay to government. So the net salary we are going to pay them by cash is 864,000, from which, from this 864,000, if they have taken a loan or anything, we are going to deduct. I'm going to go check. Remember, I don't know if you remember, we go to chart of accounts. I have a staff account. Whoever taken advances, I have recorded here. Advance to staff is recorded here. In October, there were two advances. One is for Gayani, 13,000. Sunil, 11,000 to be deducted from the salary. So I'm going to say Gayani, loan deduction or salary advance deduction, 13,000. Sunil's gonna be 11,000. Sunil's gonna be 11,000. So after deducting the loan, exactly 840,384 is the amount we are going to pay them. Yeah. Now I've connected all this together and put up an entry automatically that will pop up here. So basing this, we can make the record. We can record the transaction to the system. Yeah. So I'll just explain you how this thing works. Now 840,000. Now first we'll start with salary payable. Salary payable. How much we have to pay to the staff? Salary payable. Now this says salary payable is 840,000. You come here. If you come to see here, actually as a payment we have to make 840,000. That's correct. We're gonna say salary payable is gonna be 840,000. Yeah, that's gonna be credit. It's a liability account. Yeah. So I'm gonna say debit, credit. Yeah, salary payable is gonna be exactly this is the amount we need to pay. Okay, salary expense. Salary expense account. How much we have to put as a expense in the books? Now it says, sorry. Now it says 967,000. If you come here, you see this is the salary, total salary expense. You see, including the basic allowance OT. This is the total salary we have to pay to the employees, from which we are deducting on behalf of government these values. But actually, the salary we are going to pay is 967,957. So I'm going to say this is the salary expense account. This is the amount. So from which salary payable 840. Again, EPF and payee payable is also there. So I'm going to say, sorry, I'm going to say EPF payable. EPF payable is going to be there. So I'm going to copy this one. EPF payable is going to be this amount. The other one is payee payable. Now we have to pay this to the government. Yeah. Instead of paying to the employee, we are paying it to the government. Yeah. So I'm gonna just add a total here just to make sure everything is matching. Okay. So here it's not matching because we have deducted some amount from the employees related to the loan. So those are staff advances, 24,000. So I'm gonna say staff advances. I'm gonna say it was a debit. Now I'm gonna say 24,000 credit. So now this is exactly matching. Now this salary part is done. That's perfectly matching. There are two more things we need to do. When it comes to EPF, we have deducted 8% from the employees. We also have to contribute another percentage. You see here, we have calculated another percentage. Now, if the 8% is 65,000, we can calculate our part. So in this case, EPF payable is going to increase again because we have to pay them. So that's going to be, now I'm going to say equals, I'm going to go here. Our basic salary is there, right? So we're going to go get the basic salary. This is the basic salary for the month. Yeah. So from the basic salary, I'm going to say, so from the basic salary, we have to calculate 12%. So I'm going to say 0.12, 12%. That's going to be 97,000. So if the EPF is here, the same amount. So I'm going to round it just to make sure it's round it to 0 decimals. All right. Okay. So 97,533 is the amount EPF we have to pay as EPF payable. So in this case, EPF expense gonna be, we have to bear the EPS expense of the same amount. We have to bear this value. Okay. Not only that, we also have to pay ETF. Yeah. So it's gonna be ETF payable. ETF payable to the government. How much is gonna be? It's going to be it's going to be 3%. So on your basic salary, it's going to be 0.033%. So this is going to be your ETF. I'm going to just cut this one. I'm going to round it. Sorry. Round it. So I'm going to say round it to 0 decimal. So this is going to be your ETF payable. And I also have to pay ETF expense. This is going to be ETF expense account is going to be the same value. So this is the same thing. You see here 1089873, exactly the same thing. So this is how your calculation comes. One thing, salary payable. This is the expense, salary expense. From this, you have to pay to the employees this amount. EPF for the government, you have to pay this. Payee for the government, you have to pay all this. So, but everything is related to the customer only. Sorry, the employee only. So this value is the amount. We are dividing it here. And apart from that, we are going to deduct staff advances. And then now the amount will match. Now here, in addition to that, we have to do EPF payment and also ETF payment to the government for the employees. That's going to be on us, nothing to do with their salary. We don't have to deduct from their salary. So now this is the same thing here. I have automatically created this entry. It will automatically pop up here. Okay. So now I can simply record this part. I can go here. I can find the previous entry. So I always do that. I will encourage you to do that as well. So go to salary payable, I guess. Salary payable, yeah. So salary payable is empty, 0, because we already made the payment, everything. So this is the September salary. I'm gonna go edit it, and then we update the copy it for the month of October. So I'm copying it. Dates correct already. Not gonna do anything with the journal number. So salary payable is gonna be 840,000 this time. I'm gonna say 840,000 instead of September. It's gonna be October. Just paste it here. Okay. All right. The rest, there's no month here. Okay. That's here is September. Let's change it to October. That's bad. Okay. October. I hope the months are okay. All right. Now we have recorded the salary payable. The next one is salary expense. Now this is the salary expense account we have. I'm going to simply paste it here. And then we're going to say ETF expense. See, ETF expense account. Just we are paying behalf of them. ETF payable. This is the amount we have to pay under ETF. So this is 3%. We are paying behalf of the employees. They have nothing to do with this, but we are only paying for them. EPF total expense gonna be 97, but actually we are gonna pay this amount because we have deducted some amount from them. That also we have to pay together. We have to pay ours and theirs also. Okay. Payee tax we have deducted. Then we are gonna pay. Yeah. So we have here advanced staff that also we have deducted. So now you see here, this is the total amount. We're gonna pay them. So I'm gonna take off these details. This is the previous month. So I'm gonna save this, close it. So timesheet and salary, I'm gonna update here. Save and close. Done. All right, let's quickly wind this up. So when it comes to the monthly closing, all the transactions I have closed. So some reconciliations you need to do, but that's up to you. But in my case, everything is clear. So what I will do now here is I will check the accounts payable, accounts receivable, and also advanced suppliers, all the balance sheet items. I'll go through and check. I'll also show you, but we're not going to do any thorough checks here. So just to summarize what we did here, I show you how to do the purchase order. We recorded supplier bills to purchase items for reselling. We also recorded a lot of invoices that's related to the selling of items. And also we received the payment both for credit customers and also cash customers. We checked the bank statement and updated them. Other bills, all the other bills related to the transactions already recorded. This include different scenarios just to make sure you understand that I have included them. And also petty cash. We have included a lot of petty cash with real scenarios and then real bills. You have recorded them all already. We have seen that. Yeah. The informations are given already. So documents are also given, so you will understand them. So payment vouchers, we have recorded all the payment vouchers. We've got so many payment vouchers. All of them are recorded with the system. Payment applied for the bills. So bank statement, we did reconciliation. Finally, monthly closing, we did the bank loan recorded, fixed asset updated and recorded, lease recorded the monthly finance cost. Prepayments, we have recorded, updated the document, and we have recorded the monthly payment, monthly expense. So salary also based on the timesheet, we have updated the salary sheet. I have given you a salary sheet that automatically updates everything. Depends on your scenario, which country you're gonna work. You can change the salary sheet and start making if you don't have a payroll system in your company. Okay, it's very simple, but it's very complicated also. We can use it for higher purposes. Okay, so everything is done, everything is updated. So I'm gonna show you finally few things, yeah, just to make sure you guys get everything. If you want to get a report about a company, any accounts, you can go to chart of accounts, yeah, chart of account, and then select the account name. I'm gonna say prepaid expenses. So prepaid expenses, I'm going to go double tap. It'll take you to the expense. Now it will show you from beginning till now all the transactions. You can, the moment if you click here, if you click here, it'll show from a recent transaction to the older transaction. Again, you can sort it by older transaction to the recent transaction. You can also sort it by account type, all those things, but I don't recommend that. You can always only the date you might be sorting it by. Yeah. Okay. So here from here, you can change the account name, select different accounts and check their report as well. Whenever you want, you can simply download from here that I have already told you how to do that also. Yeah. Okay. This is about any account transaction you want. You can go to the account chart of accounts and you can find it there. Apart from that, there are some specific reports. Whenever you want, you can get from the reports. I'm going to go to the report, click here, reports. Now, under the reports, you see there are so many different areas. We are not going to go through everything. I have gone through everything and I have bookmarked some of the reports here. So now we're going to show you, I'm going to show you some of them just to get the idea. The first one, accounts payable aging summary. We want to see how much we have to pay. Yeah, I can also search here. You see here, accounts payable aging summary. You click here, the same thing. Yeah, if you click here, it will take you to say payable aging summary. Now, because you are in the end of October, you select the end of October, and then you can run report again. It will show you the detail as per October. Now, today is October 31st. In this case, these are all current payables. Don't have to worry about that. Now we have some payables that are more than 1 day. So probably few days old, we might have to pay them. So on 31st October, there are some payables we need to make these payments. Maybe we can pay in next week or a couple of days time, no problem. This shows all the payments we have to make now. These payments we have to make now because they are overdue already. For example, if this bill is 60 days, this one at least 61 days, more than 60 days. Yeah, that means we need to pay them. So this is how the information. We don't have any old bills. We are a good company. We pay on time. Yeah. So this is how you check the payable. Now, if you click here, it will show you what are the transactions related to this. Only one bill here. So 56 days are overdue. So we need to pay them. Yeah. Okay. So this was issued on 30th August. 30th September, 30th October. So we have actually only 1 or 2 days overdue, not past due. It's overdue. Yeah. On 1 or 2 days only. So don't worry about it. So we can go back to summary. You see, this is how you get the summary. It's very easy. Now you see a number of period. If you put 3, you see here we have 1, 2, 3, 4. Sorry, 1, 2, 3, 4 separations. If you put 3 and run, you won't be able to see this 91 and over. It becomes 61 and over. Depending on the company, if you don't have too many separations, you always pay on time. So you can you can do this one in this way. Yeah, you can change the number of periods. All right, that's accounts aging, accounts receivable, payable summary. You can actually have, there are some different accounts accounts payable, sorry, payable aging detail also there. Like that'll show you invoice by invoice. I'm going to just show you for the moment just to make sure you understand. See, this is too much information. If you have so many bills, it'll show everything. You won't be able to locate. But in case you want to find one particular invoice or something, you can use that. And the next one I'm going to show you, account receivable aging summary. You can click here. Alternatively, you can also search there. Now, I'm going to put the date. Because of this is on 24th of December, it shows that I have a receivable, accounts receivable of, accounts receivable of over 31 days overdue. Actually, we are still in 31st of October. So in this case, I'll show you exactly. So the current ones are there. There are some invoices we haven't received. These are only very few days old. Now I'm going to click on this to see how many days overdue. Now you see here, invoice was issued on 31st August. Yeah. So due date is 30th of October. We are on 31st of October. That means only 1 day overdue. So it will show just like the accounts payable, accounts receivable also, you can get the report here. You can click and you can see the details. It will show the total here, current one here. So details are, so you can simply print this one and then you can give it to the management, or you can, if you have some 60 days, 90 days, you can put it in a, what do you call, a graph or something, chart, and then show it to the management. Or if you are the one who's collecting, you'll have to collect this money from the customers, call them and get the payment done. Yeah, that's accounts receivable. And then next, we're going to do balance sheet. Now, before go to the balance sheet, I would like to go to the trial balance. Yeah, we'll start with the trial balance because auditors will ask, your auditors will ask for the trial balance. Usually, that's how it happens. So yeah, the trial balance, when you say trial balance, that is the balance. You remember you did in the school, you will do T accounts, and at the end of the period, you will bring all these T account balances to one place. We call it trial balance. The same thing you can get from the system also. So in this case here, I want the trial balance for the month, the period of 1st October to 31st October. So I'm going to run the report. Yeah, this is the trial balance. That's balance. It shows all the account balances on this particular date. Yeah, so you can get the trial balance in this way. There are different trial balances you can get. I mean, now I suggest this one. This is very simple and it gives you everything. So if the auditors ask, simply go to the trial balance, and then from here you can export to Excel, and then you can give it to the auditor. It's very simple, but make sure to select the period correctly. Yep. I'm going to go back to the reports. There are again different trial balances we can take. So we have seen only one. Yeah. Next one, I'm going to show you the profit and loss. That's quite important. So I'll show you the profit and loss. Again, I'm going to set the date because we are doing the transaction for the previous period. It's really difficult to, go back and change the date. But if it's in the current month, it'll be easier. Now you see here, income statement, the entire transactions are shown here. You see, we have got sales, discount given, and then actual revenue, cost of goods sold. These all we have recorded. Yeah, it's nothing like previous record or something. This month only we have recorded everything. It's everything in the video. So if you go to cost of goods sold, you see all the transaction related to this cost of goods sold. All the invoices will be shown. These are the invoices related to this cost of goods sold because it's perpetual inventory system. The moment you record the invoice, automatically your cost of goods sold is recorded. Because when you purchase something from the suppliers, it's recorded as inventory. But only when you sell the item, the cost of goods sold is recognized. So cost of goods sold for this value of revenue is 1.6 million. That's how it happens. Yeah. So here you've got the telephone expenses, water and electricity. Now you have different expenses. Now you don't know exactly what's correct, what's not correct. So for this purpose, there's another report called profit and loss by month. You can click on this and now you can compare how the profit and loss works. Now in this case, we don't want till, so we go with August, easier to, otherwise it'll be too much. From August till 31st October. Now, this is the period. I'm going to select OK. So, there will be only 3 months, August, September, and October months. Yeah. Now, we can compare now you see here, August, the cost of sale was 3 million. It's 2.8. It's 1.6. It's getting better. In this case, it's getting better with the cost of goods sold. Yeah. So, you see here the telephone expenses, you can compare now. Water and electricity, easily you can compare. It is increased. Repair and maintenance, dues and subscriptions, bank charges. You see here, it was too high at the beginning for some reasons. So you see salaries and wages increasing, ETF, EPF payments. You hear sales and marketing expenses increasing, stationery, meals and entertainment. It's slightly lesser now. Maybe at the beginning parties were there. Fuel expenses, it's actually higher. In the middle, it was slightly less. Transportation and taxi, similar. Registration and license, similar, because that's from the prepayment we are taking. Income, interest expense. You see interest expense is starting from September because we have loans. Finance cost, this is related to that. So it seems like everything is recorded properly. There's no anomalies. There's no different values. You see here, you have recorded these transactions. Now you have the profit and loss account. That is also monthly comparison. So if you show this to your boss, print and show this to your boss, that will be good enough. That's your task. You have achieved correctly. Yeah. And also you can see one more profit and loss percentage as total. Yeah. So we can go to 1st of October from 31st October. Then we can run the report. You see here, it will show the percentage, what happened. Comparison percentages will be shown here. Okay, that's also, you can see all these reports you can search from here. But I have only summarized, put the bookmarks here just for that I can understand. Okay, next one, I want to show you the balance sheet. Now we have seen the trial balance, income statement. I'm also showing you the balance sheet. So 1st of October till 31st October. You can also compare the balance sheets. I'm not interested in comparing, but here our balance sheet values are shown here. So you can see the balance sheet values to see if there are any differences. So now office petty cash was 121,000. There is a issue here. I think there's one entry that was not recorded properly. Other documents, I think we missed this one. See how that's how you spot the errors. Transfer of 200,000 cash from main petty cash to petty cash account, 200,000 on 16th October. So we have to do a transfer from petty cash cash main to office petty cash. Transfer amounts 200,000. Yeah, on 16th of October. You see, we did not record it properly. Transfer. It says 7. Just transfer also you can put if there is a document. Okay. Now if you refresh, did I put correctly? Or 200,000 or 20,000 I put. Let me check. So petty cash, I'm going to click on this. I'll show you all the transactions. Yeah, instead of 200,000, I put 20,000. Supposed to be 200,000. Yeah, 7 close. Okay, can check to the summary. Now see here, petty cash balances are there. It's perfect. Commercial bank, there is a balance. Temporary account, there is a balance. We have to check why. Because usually the temporary account should be 0. That means we are missing one entry. So this is how you find the mistakes and then you close. See 5686. We put it under temporary account, but we didn't take it off from the temporary account. See, temporary account, we we close the receivable through temporary account, but we did not pass a entry on 15th of October. So I'm going to pass an entry. So this is how you find your mistake. Whenever you go through this, you will find your mistakes. So it's going to be, which account. So let's see what happened here. So usually here, 4,900 to temporary account. So it's paid from temporary account. What happens here is in the JV, bank charges we are putting. Yes. So here also, this should be a bank charge. So go here, check this one, what happened here. So this 5686 is a bank charge on 15th October through temporary account. Yeah, I'm going to go to journal entry. So I'm going to say minus 15th. Yeah. So bank charges. So we missed this transaction. I'm just recording. So this is the amount. Adjusting bank charge to the invoice via temp cash account. Okay, 0. Now I have to reduce the temp cash temp account. So we're only fixing the issues, save and close. All right. So now temp cash account is 0 now. We can go back to the summary. See, we have fixed a lot of issues here. Temp cash is 0. Pending sales deposit, they have to deposit, they still have to pay this amount. Likewise, you can go through this and you can see here, see the furniture and fixture, security deposits there and current assets. So every month you have to make sure these amounts are correct, and then you maintain a proper accounting here. Okay, so we have checked the balance sheet also. Finally, few things are there. We'll check them and then we can wind up. Okay, so I'll show you statement of cash flow. Yeah, all right, statement of cash flow. Now say 1st October to 31st October. I'm gonna run the show, run the report. You see here, these are the cash flow now. Unlike before, you see the proper cash flow of operating activities and also the adjustments. Now it'll show net cash from operating activities, and then it'll show investment activities, and after that financing activities. At the end, cash and equivalent at the end of the period is shown. So we can confirm this one from the cash balances. Yeah. So this is how the cash flows are shown. You can simply print all these income statement, balance sheet, and cash flow, show it to the management. All right. Cash flow statement are okay. So now also I'll show you general ledger. This general ledger is actually all your transaction. I'm going to say October only, not for the whole period. October, if you run general ledger, it will show all the transactions you have recorded. Now this is all these transactions who recorded. You guys recorded all these transactions. I think last 4 days. Yeah, all these transactions are shown here. So so as an accountant, you should be proud at the end of the period. You are seeing all these transactions. You have recorded them, and you can take reports out of it. So anything you want, you can go to this transaction journal, and then you want to take a copy, you can just simply download this one and then get a copy also. Yeah, that's general ledger. That will show you all the transactions. Whatever you did throughout the period, it will show you. And also, I want to show you the tax liability. Yeah, so tax liability I'm showing on 31st October only for this period. Running, run the report. Yeah, October only showing here. So you see here, from the sales, we have collected 4.1 million. From the purchases, we have paid 3.4 million. So in this case, we only have to see the difference. Right? It shows the difference. So this is the amount we have to pay for the month of October, but we already have some extra value that we paid to the we purchases. I'll show you from the beginning. 1st of August till 31st October, if you run, you'll understand. Total, you see here, sales 12 million, but actually purchases, 18 million. That means we don't have to pay to the government. Government actually owes us. So we don't have to pay anything to the government at the moment. When it becomes the amount that the sales amount is higher than the purchases, in that case, we can pay the government. Yeah. Okay. That's it about the tax. One more thing, I think. Just one more thing. Two things are there. Inventory valuation summary first. I'll show you inventory valuation. Now, if you check on the 31st October, run the report, you'll see all the inventory values and their average cost. Now it will calculate out average, right? Weighted average calculations. You see all the inventory items, how many units we have. See 1 unit, 2 unit, 5 unit, and their weighted average cost is shown here. So you can get the inventory evaluation report. Now, if you go to sales and production services, also you can see the inventory value and their how many units are there. But under reports, if you search for inventory valuation summary, you can also get details. I don't want to go into details. So you see whatever the amount you have and their balances here, value also. Yeah, that's one thing. Finally, I want to show you there's something called audit. Now we have seen almost everything. Yes. Profit and loss, everything. Yes, it's already shown. Just one thing, audit log. Yeah, there's something called audit log. If you go here, if you click on the audit log, it's going to show you every transaction that happened, which user did what, all these transactions are shown. Now I'm the only one who's doing the transaction. So my transaction is shown here. It says, so in Indian Standard Time, Jeffrey Sadin added a journal entry number 89. So what happened? I can click here. I can see what exactly happened here. Yeah. Hang on. See here what happened to this journal. Nothing. I'm the only one who did. Details are shown here. Okay. Hopefully it will go back to audit log. Yes. Yeah. So likewise, you can go to any transaction and see who else changed this. If somebody changes, it will be shown. Now, if you are an accountant, your informations are already there. And if you made some changes, it will all be recorded here. Who recorded, who changed it after that. All the informations will be there. So be careful when you do. Don't do something crazy and then later get caught. Yeah. So you have to be careful. You made a mistake. Go to the accountant or management or finance manager and tell this is what happened. Then they will correct it. All right. Okay. With that, our session. I'm concluding the session. I'm telling. I'm a little bit disappointed that most of you did not show up. I'm only waiting for the recording. So you guys, most of you, I mean, all of you have paid already, but if you are paying and then you have to attend a class also. Anyways, that's it, or in the past. But again, you should understand, we don't have too many things in this QuickBooks, only very few things. You can you want to do something new, you go here, you do the transactions, and then it's not too much. And also, there are only very few in the menu: product, chart of accounts, invoices, customer expenses, very few things. It's not a very big thing. Yeah, just a small thing. All right. So I'm concluding the session now. With this, our QuickBooks Online session is over. All right. Wish you all the best. Good luck for everybody.